Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be reviews of the names I covered in past videos. This week will be on Eurodollar, Gold, BMW, Richemont, Infineon Technologies, Netflix, Wells Fargo, and silver. The new coverages are the S&P 500, Eli Lilly, Deckers Outdoor, TotalEnergies, Barclays, Bank of New York Mellon, and Swiss yen. In case you don't want to know about the old stories and just want to know what is new, I have put in timestamps in the description for your convenience. In the video on the 25th of August, I said that after a big rally, and with price action excessively above the upper Bollinger over here, I expect the following 1 to 3 weeks to be declines for Eurodollar. Eurodollar declined last week, and of course, even though this week is an advance, I would like to highlight a few reasons why I still think Eurodollar could get further downside correction in the coming weeks. The most important reason is the resistance at 1.1139. Now, back in July 2023 over here, Eurodollar broke above this resistance but failed to hold above it, and in the subsequent week was rejected by this resistance, leading to further downside before bouncing off the cloud support. These were repeated in the last 3 weeks. There was a breakout above 111.39, followed by a subsequent failure to hold above this resistance, and this week we saw a rejection at the same resistance. So all in all, I believe a repeat of what happened in July 2023 could be going on in the coming weeks. That is, a continued decline as a form of correction, a correction of this bullish symmetrical triangle, possibly to where the cloud support is currently around 1.0861, before bouncing off the cloud to resume the upside. So all in all, I still think the Eurodollar is bullish, but the decline in the coming weeks should be viewed as a corrective decline. That is, I've said it's common after a pattern completion to have corrective declines before upside resumes. I said to be cautious about the prospects of further upside in gold in a video on the 25th of August, because over here, I cautioned that it has formed a doji, a neutral candlestick forming in the midst of a bullish outlook is worth taking heed. And I noted that there is a risk of a decline going forward. So gold has slipped for 2 consecutive weeks, and while the bullish rectangle that you're seeing here on the weekly chart, it is still not invalidated. There are signs of increased bearishness on the daily chart. So let me show you what I mean. Just give me a couple of seconds here. This is the daily chart, and it appears to be forming a rising wedge, which is a bearish pattern. So the only positive takeaway that we can see from the daily chart is that price action has bounced off the 20-day simple moving average for 4 consecutive sessions. All these are holding back the bears, but once, I believe, if there is a breakdown below the wedge support, then this bearish pattern will be complete. There is a potential move of $179.9 to the downside. Also, I would like to note that on the RSI, as price action goes higher and higher, you can see that it is very clear that the RSI is going lower and lower. This is called the RSI price momentum divergence, and if this happens, this is a sign that there may be a bearish reversal. So take caution on this. For now, I believe gold is still not bearish, but once there is completion of this rising wedge, then I will be turning bearish on gold. We now move on to BMW, a name that I've been cautioning about the prospects of further downside since at least June. I last covered BMW on the 11th of August and noted that there is bearish completion of the double top over here. BMW attempted a rebound over here, which should be viewed as the correction phase of a bearish pattern, and this week's decline is likely the bearish resumption phase. The textbook target remains at 61.48, and the firm support at 68.57 may prevent BMW from reaching this target. Another double top that was completed also appeared in Richemont. When I last covered Richemont in the video on the 11th of August, I said that it is bearish. There were two gap downs on the 2nd of August over here, as well as on the 5th of August over here. And this is what I have mentioned in the past videos about other names as well. Gap downs are usually filled. So Richemont did just that with the rebound to just before the cloud resistance, filling up the gaps on the 2nd of August as well as 5th of August before returning to the downside. But I expect a rebound in the coming days as well. So I expect Richemont in the coming days to be higher still because of two reasons. Number one, you can see there is clearly a gap on the 4th of September. So as I've said just now, gaps are usually filled. Therefore, I expect Richemont to be higher to fill this gap. We could get to as high as 132.90 before falling thereafter. Second reason is that price action is excessively below the lower Bollinger. So this is a sign that there usually is a rebound of 1 to 3 days higher before resuming the downside. But all in all, I'm staying bearish on Richemont due to the completion of a double top bearish pattern. The textbook target remains at 100.45 over here. And there are two supports at 114.8 as well as 104.1 that can bounce Richemont higher when tested. I last touched on Infineon Technologies in the video on the 11th of August, in which I said that there was bearish confirmation via a breakdown below the symmetrical triangle, and the textbook target is excessively low at 9.1. But what I did not foresee was how quick Infineon Technology entered the corrective phase. So there were 4 consecutive weeks of upside, and I believe this is the corrective phase. With the sharp decline this week that totally wiped out the gains of last 4 weeks, I believe Infineon is in the bearish resumption phase. So sticking to a bearish view on Infineon Technologies. Netflix is a bit tricky. I said that I still expect further downside in Netflix in the last video on the 25th of August. This was because that the resistance at 691.72 continues to be blocking further upside in Netflix. Of course, last week we saw a weekly close above this resistance that got me a little worried, but this week's immediate decline back below this resistance shows me that this break is a false one. So I will stay bearish on Netflix, expecting further downside. The textbook target remains at 437.52. In the video on the 18th of August, I said that Wells Fargo was undergoing a corrective rebound after completing the head and shoulders top, very common, and that the gap down on the 2nd of August over here would first be filled before resuming the downside. So both has happened. We see the upside, we see the rebound filling up the gap on the 2nd of August, and this week's decline, I believe, is the resumption of a bearish trend back below the neckline. I'm staying bearish on Wells Fargo. As noted in the video on the 2nd of September, the downside bias has led silver lower this week, further solidifying that the case for a bearish move going forward. I still think it is forming a head and shoulders top that must be completed via a close below the neckline around 26.5. What is important that the price action on 2 days, 5th and 6th of September, were rejected by two resistances. First, rejected by the 20-day simple moving average. Then they were both rejected by the cloud resistance. A common occurrence that I've pointed out over here, and a few more days, all of them were rejected by the cloud resistance. So a downside bias clearly prevails. I'm expecting further downside going forward, and once there is a close below the neckline around 26.5, a bearish outlook is confirmed. The textbook target for this is as low as 21.96. Note there is a support at 24.42 that can bounce silver higher when tested. I'm going to start the new coverage by telling you that the US equities market could fall into a slump in the coming weeks or months. The S&P 500 appears to be forming a double top, a bearish pattern, and the latest close below the cloud is a sign of increased downside bias. Of course, S&P 500 needs to close below the neckline at 5,119.26 to confirm that this bearish pattern is complete, and if it does, the textbook target is at 4,588.06, which is around 15% drop from here. Note that there are some of the big names that I've noted on this channel that have a bearish tilt to them, like Meta Platforms, Microsoft, Netflix, Dell Technologies, and Wells Fargo. I've said just now that there are big names with a bearish tilt to them. Eli Lilly is one of them. I believe Eli Lilly is also forming a double top. The latest close 2 days ago below the 20-day moving average adds a downside tilt to Eli Lilly, and I believe further declines are expected. Once Eli Lilly closes below the cloud, a bearish bias will prevail, and if there is a close below the neckline at 747.55, this bearish pattern, the double top, will be complete. The price target is at 529.71. Of course, there are supports at 618 as well as 721.59 that can bounce Eli Lilly higher when tested. We now move on to a name called Deckers Outdoor. It's a footwear and outdoor apparel company in the US. I believe it is forming a head and shoulders top, a bearish pattern. The latest move below the cloud gives it a bearish tilt and suggests further downside. This bearish pattern will be complete via a close below the neckline at 810.3. This has a textbook target of 506.48, and the supports are at 722.07, 652.35, as well as 567.2. All of them can bounce Deckers higher when tested. Next, we covered TotalEnergies, a French energy and petroleum company, may also be going lower in the coming months. I suspect that it is also forming a head and shoulders top, a bearish pattern, and we need a weekly close below the neckline at 57.99 to complete this bearish pattern that has a textbook target at 45.95. Watch out for the potential bounce around the support at 50.61 that can end this bearish trend. We now move over to the UK, Barclays. It is also forming a head and shoulders top in my opinion. The latest close on Friday over here within the cloud is a sign that it lacks upside strength. I suspect the next move is going to be lower below the cloud, and if true, this will give Barclays a bearish bias and highly likely further downside. And once there is a close below the neckline at 197.66, this bearish pattern will be complete, and it has a textbook target at 153.62 with the support at 177.58 that risks bouncing Barclays higher when tested. The final equity name for this video is Bank of New York Mellon. Appears to be forming a rising wedge, a bearish pattern on the weekly chart. This week's price action appears to be a rejection at the resistance trend line. Now, I'm suspecting that the next move due to this rejection for Bank of New York will be lower. And once there is a breakdown below the support trend line, this bearish pattern will be complete and there is a potential move of $9.55 towards the downside. Also, I would like to note that the RSI is showing price momentum divergence in that. Comparatively, the price action gets higher and higher and the RSI gets lower and lower, and I've said this before early on in this video. This is a sign that there is potentially a bearish reversal in the works. The only FX cross that I have for you for this video this week is on Swiss yen. Most, if not all, yen crosses are bearish in my view, and in the case of Swiss yen, there is a bearish chart pattern to suggest this notion: a head and shoulders top. The neckline is at 166.82. A weekly close below this neckline completes this bearish pattern, and the textbook target is at 153.66. And watch out for potential bounces around the supports at 160 as well as 162.2. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.